Psst. Do you hear that? It's the sound of me using my plasma particle accelerator beam to pay for things with cryptocurrency. But seriously, today we will talk about a project that when you hear its name, it makes you think about all those sci-fi nerd movies that I know nothing about. But we all know about money, and this could be a bigger money maker than Star Wars. For you anyways. Let's get it.
I got him! Great pin! Don't get cocky!
Welcome to BitBoy Crypto. My name is Ben. Every day I show you how to make money in cryptocurrency. If you like money, make sure to go ahead and hit that subscribe button and tap the little bell. All right, guys, so I got an energetic treat for you. It's called PlasmaPay, and it's reshaping the DeFi world as we know it, if you know it. PlasmaPay bills itself as Banking 3.0, stating it makes decentralized finance effortless. With easy-to-use fiat on and off ramps, fast and free transactions, and intuitive apps, this might be one of the most important projects out there. There are so many of these DeFi applications that are cumbersome to use even for seasoned crypto vets, all 17 of us. If we ever want to see DeFi reach its full potential, these apps are going to have to focus on user experience and ease of use. Talk about that all the time. This has been the primary focus of PlasmaPay, as well as delivering the future of finance by banking the unbanked. Finally! In fact, PlasmaPay claims to have been servicing 160 plus countries with over 100,000 users and businesses since 2018. Beyond that mission, Plasma has a bigger goal to replace all of centralized finance, or sci-fi, not to be confused with sci-fi. That's the sci-fi network, nerds. This is financial banking in crypto. PlasmaPay doesn't want to stop at being a user's bank. They want to expand their blockchain into stocks and commodities as well. The project also notes that it supports and has been built to provide full CBDC support and interoperability. And no, those aren't those little gummies you eat at night. PlasmaPay's wallet supports non-custodial BTC, ETH wallet, plus 300,000 ERC20 tokens, Plasma DLT stablecoins, and crypto-to-crypto exchanges. This app is available on iOS, Android, and web. And you simply have to create an account, then connect your card to it and deposit funds, or just send your cryptocurrencies from exchanges or other wallets to begin using PlasmaPay. PlasmaPay's app is just one part of its ecosystem, which includes a custom-built blockchain called Plasma. How surprising. According to PlasmaPay's website, Plasma DLT is a blockchain and application infrastructure with a mission to decentralize the centralized financial services industry. Plasma technology allows developers to build robust financial tools that empower people to control their assets. While users will be able to use DeFi products from within PlasmaPay, developers will be able to use Plasma's gateways to develop new DeFi protocols and dApps. There are several companies that could utilize PlasmaPay, including online businesses, mobile web developers, and e-commerce businesses are just some examples of organizations that can benefit from utilizing dApps and other tools built on top of PlasmaPay. Benefits of using PlasmaPay includes payment processing, sending and receiving payments regardless of card provider or bank, cross-border transactions, all with zero commissions and instant liquidity. Plasma is a layer 1 blockchain solution to enable faster transactions, build DeFi apps, and 0% gas fees for DeFi. Yes, you heard me right, 0% fees compared to Uniswap's ridiculously high fees that I once saw go as high as $75. Plasma is capable of upwards to 50,000 transactions per second, so the blockchain performs at lightning fast speeds without users needing to worry about additional costs. That's great for PPAY and the 42 stablecoins that Plasma DLT supports. But thanks to another technology called Hyperloop, it's good news for other reasons, which includes smart contracts. Hyperloop allows PlasmaPay to represent assets of other chains on Plasma DLT through smart contracts. Although the technology isn't released yet and is slated for a mainnet release in Q2 of 2021, the cross-chain interoperability could be a game changer for DeFi. So you can see, you DeFi gens, why PlasmaPay would be a great idea. Just to clarify, I'm also a decentralized finance degen, of course. I try to stop, but it's like a disorder I have where I see low-cap projects on Uniswap, put in a ton of money and then lose it within 24 to 48 hours. Anybody seen the gains? Actually, you might say this is worse than gambling at a casino. It's more like playing roulette with your money. I don't advise it, even though I do that all the time. Seek help before it's too late. Instead, you should stick to verified real DeFi projects like PlasmaPay, which still offer decent returns, as well as an awesome suite of DeFi tools that any degen will love. These include a dashboard for DeFi, DEX for swapping, liquidity pools, staking, governance, lending, borrowing, liquidity mining, and finally, fiat on and off ramps. Not too shabby. Plasma's built-in DEX has the ability for pool liquidity management, allowing for the decentralized swapping of any ERC20 or Plasma-based token for the lowest possible fee. Liquidity providers will have the opportunity to earn from trading fees based on a proportional share of the liquidity they provide. Now let's talk PPAY. And no, I'm not talking about the fine you get when you pee behind a bush at a bar in college. That happened to my brother. But PPAY holders who stake their tokens will also be eligible for a proportion of trading fees proportional to the number of tokens they stake. Finally, staking LP tokens or liquidity pool tokens will provide rewards in the form of PPAY. All of these incentives encourage users to lock up liquidity for the Plasma DEX while rewarding all participants, like participation trophies. As per the white paper, 525 million PPAY will be placed into a reservoir contract, which PPAY per day into the protocol for distribution. The distribution is allocated to each market on liquid pools, ETH, USDC, PPAY, proportional to the interest being accrued in the market. As market conditions evolve, the allocation between assets does too. Once an address has earned 1 PPAY, performing any PlasmaPay DeFi dashboard transaction, for example, providing liquidity or an unstaking PPAY, will automatically claim PPAY to the wallet. For smaller balances, an address can manually collect all earned PPAY. PlasmaPay has also been turning heads with some pretty big partnerships, to name a few. Elrond's eGold, Base, and Bitfrost, the world's first blockchain middleware that enables multi-chain technology. If that's not enough, PlasmaPay managed to receive 2 crypto licenses in Europe, which has helped them prove their legitimacy to the banks and various companies around the globe. So let's dive more into the tokenomics to understand how we can make those sweet, sweet gains. I can almost taste them in my mouth. As mentioned, you can earn a portion of the trade fees based on the amount of XPPAY held relative to the weight of the staking according to PlasmaPay's white paper. So if PPAY wasn't enough, now we have XPPAY, or former PPAYs. Now they're XPPAYs. Tokens are staked to ensure the network remains secure, as positive delegates in governance are rewarded and negative actors lose their stake. How does PPAY reward its users, though? You may be wondering. From PlasmaPay's white paper, the team states the following. PlasmaPay acts as a collector of fees from DeFi instruments. For instance, in exchange in Plasma Swap, a trader will pay a fee of 0.3%, where 0.05% will go to the stakeholders and 0.25% of commissions will go to a liquidity provider. PlasmaPay plans to use a commission collector in all DeFi dApps. In real time, users earn PPAY proportionate to their staked PPAY. This is separate from the natural interest rates in the market. But hey, don't take my word for it. Simon Diedick, managing partner at Moonrock, said the following about PlasmaPay, and we followed this guy before. He's got some crazy predictions. DeFi is undoubtedly one of the biggest and most promising movements the crypto market has experienced to date. However, I think we can all agree that it's far from being ready to be mass adopted due to yet to be solved problems like scalability issues, cost efficiency, and most importantly, ease of use. There are several projects we are counting on to solve these issues to make DeFi mass adoption happen over the next years. And PlasmaPay definitely belongs to the most promising ones. Very interesting. So what do you guys think about this one? Drop me a comment down below and let me know if you are down with PPAY. But that's all I got. Be blessed. PPAY out.